What's up, everybody? It's your main man, Pips, aka Mr. Levels, aka Hop, aka It's Up There. You know, I'm about to go over my pre-week analysis. I just want to outline how I foresee the markets opening up this week and what I think we're going to see out of price action this week. So, before I jump into it, I would just like to say this is not financial advice. Anything that I share on this call is for educational purposes only. Let's get into it. So, starting out with the dollar as always, because we use the dollar to gauge our other asset classes that we trade. I'm anticipating the dollar to pull back down into last week's discount array from last week's price range, right? However, being that last week did pull down into this imbalance, right? In this BC that we had right here, right? Buy side imbalance, sell side inefficiency. I am paying close attention to this implied fair value gap that we have on the daily time frame right here, right? This shaded area. I want to see for the rest of Asian markets tonight in London opening, how price reacts to this level, whether we break below it and close below it during that time, right? Break it down to a 4 hour time frame, right? Whether we break below this shaded area, right, which is that implied fair value gap, or whether we find support here and reject this level, right? Depending on which side of that we see is going to determine the bias for the rest of the week, whether we pull back down into that weekly discount array from last week's price range, or whether we push up to run last week's buy side liquidity. So for right now, I'm neutral on the sideline, and I just want to see how the dollar reacts to this shaded area. So I'll be paying attention to that throughout the rest of tonight and going into London. And then when I wake up for London, I will see where we're at, and then I will start making determinations from there, right? So with that being said, let's go back to the weekly time frame, and we can see the discount array for last week's price range, and we see that shaded area, and we see last week's buy side liquidity, and I want to see us run up and run that buy side liquidity, right? But we gotta get some confirmations first, right? And if we do break below that inverse, that daily um implied fair value gap, right? I want to see us come on down and run those discount arrays. So that's what I'm looking for out of the dollar to start the week out. So let's see how that plays out. Moving on to currency pairs that me and my group trade, which is Euro USD, GBP USD, and NZD USD. I would like to see Euro USD pull back up into last week's premium array, right? Now, notice this weekly fair value gap that we have here, right? Um, I'm going to be paying attention to how price reacts to that upper level of that fair value gap, right? If we cannot break above that, if price rejects off of that upper level of that weekly fair value gap, then I will expect price to come back down and run last week's sell side liquidity right here at this level. If we break above that upper level of that weekly fair value gap, then I'll definitely be expecting price to run up into those premium array levels for Euro USD. Um, and what I'm thinking we're going to see is I think we're going to see the dollar open up the week bearish, right? Pushing currencies higher to run up into the premium levels of last week's price range. And then I think the dollar is going to find some support, right? And maybe towards the middle of the week start to push bearish. I mean, start to push bullish. And then as that happens, we should see Euro USD start to push um, bearish if we get that initial bearish move out of the dollar, right? So let me take you back to the dollar right quick because I know it can be confusing, right? So expecting the dollar to pull back down into last week's discount array levels from last week's price range, I will be expecting Euro USD to pull back up into last week's premium price levels from last week's price range because we know that our currency pairs are inversely correlated with the dollar, negatively correlated, meaning they move in the opposite direction of the dollar. So when you have the dollar going in one direction, you should have your currency the opposite direction. So I am a being that I am anticipating the dollar to start out the week bearish, I am anticipating our currency pairs to open up the week bullish. Now, if we get the dollar to come down and find support, right, off of last week's PD array levels, then we should get Euro USD to show resistance off of last week's PD array levels. And if we see the dollar start to push up higher off of these levels, then we should see Euro USD start to push down lower off of these levels, right? So where I would be expecting the dollar to push higher off of these levels and run last week's buy side liquidity, I will be expecting Euro USD to push lower off of these levels, running last week's sell side liquidity. Plain and simple, ladies and gentlemen. Same thing with GBP USD, same exact thing. And looking at NZD USD, same exact thing, ladies and gentlemen. Same exact thing. And if um the dollar continues to push lower after running into its discount levels from last week's price range, then we'll just expect currencies to keep pushing higher. Um, through these premium array levels, right? So moving on to metals, I do anticipate silver pulling back down into last week's discount arrays for last week's price range, right? Now here's the tricky thing with metals, right? Because they too inversely correlate with the dollar. So if the dollar does push lower, we very well could see um, silver just continue to push higher without giving us a pullback. I do want to note something right quick that I didn't even pay attention to. I see this inversion fair value gap, weekly inversion fair value gap. So we could see silver pull back down into here, right, as low as here before it shoots up, right? And then that would give us that inverse correlation. Well, no, it wouldn't give us an inverse correlation. It would give us some divergence between it and the dollar, right? Because they should be moving in the same, I mean, in the opposite direction. But when they're moving together, then I like to call that a divergent correlation, right? Meaning that a pair that usually moves opposite of one another, is moving um, in the same direction. Um, so I call that a divergent correlation. So what we possibly could see out of silver is some divergent correlation in the beginning of the week. We could see it pushing down along with the dollar, right? And then I'm gonna say down to consequent encroachment of that fair value gap, right? I know that's not perfect. Not gonna put the fib on it and get it perfect. You can do that on your own accord. But I would like to see us push down at least to consequent encroachment of this um, inversion fair value gap, and then see silver continue to the upside. So that's what I would like to see out of silver. Gold, same thing. Um, I would like to see us pull back down into last week's discount array levels of last week's price range. However, if the dollar open up as I am anticipating to the downside, then we could very well see gold continue to push straight up as well. So that's what I am looking at for metals. Looking at oil, um, I'm neutral right now for oil. Um, I would like to see us push back down and fill in this fair value gap, this weekly fair value gap. Go ahead and fill it in completely, and then reject that lower end of that fair value gap, and then start to push higher so we can get back above this weekly fair value gap to the other side and find some support on that top level on the top level of that weekly fair value gap and continue to push higher up to $100. So that's what I'm looking at for oil. Looking at futures, looking at ES, I want to see us open up the week and push back higher to run buy side liquidity, right? Now I am anticipating a pullback down into last week's discount array, right? I'm anticipating that. So if we do see that come down to that, we want to see price reject these levels. And if we see a strong rejection off of these levels, that's even more confirmation that we are going to run last week's buy side liquidity, right? If we push back lower through these discount levels and close below them, then I would be expecting us to run last week's sell side liquidity and for us to run down into this weekly fair value gap that we see here. All right. My ultimate target is this big weekly fair value gap that we have here. That's my ultimate target that I would like to see price come down to. But as the saying goes, to go lower, we must first go higher, and to go higher, we must first go lower. So if we're going to continue to go lower, then I would expect for price to run higher first, taking out the liquidity to the upside before we sell off. So for ES to open up the week, I do expect us to uh, run buy side liquidity. And so whether that entails us coming down and retesting the discount array or whether that entails us just shooting straight up, I'm gonna give it until London opening to see what price action does between Asian markets tonight and London tomorrow. And I should be able to determine something by New York AM session. Or maybe I might even let Monday play out, the whole day play out Monday, and see what the whole Monday's range gives us, and then start to get in the market on Tuesday, based off of what Monday's price action gives us. I think that's what I do. So looking at E-mini Dow, same thing. I'm expecting us to open up the week pushing higher, pushing up into last week's premium arrays for E-mini Dow, and then we'll see how price reacts to those levels. Um, yeah, simple as that. And for E-mini Nasdaq, I would like to see us push higher to run last week's buy side liquidity from last week's price range. Let me go to the dollar because I mean to the daily time frame because I had daily time frame price range mark two, and I got that PD array level here for last week, last Friday. So we could see a pull back down into Friday's discount level before we see it run. But I would like to see us run Friday's buy side liquidity first and then maybe then go lower. But depending on what price action gives us throughout the rest of Asia and going into London, hopefully it'll give us some confirmations by New York AM session tomorrow, and we can take some plays based off of price action between now and New York AM session. So that'll pretty much do it for the pre-week analysis. Last but not least, crypto. I would like to see Bitcoin push back up off of the level that it just ran, so we can get back above 28,450 and start running up toward 32,000. And the same thing with Ethereum. I would like to see us get back above uh push. I would like to see us push up off of this level that we just ran. But I don't know. Ethereum could finish filling in all of this imbalance and come back down to retest 1400. So we'll just have to see with Bitcoin and Ethereum in crypto. With me, I don't day trade crypto. I dollar cost average into crypto, just add to my position. So I trade crypto a little differently than I day trade my other assets. So I'm still a believer in ApeCoin. I do believe that ApeCoin will retest all-time highs eventually. So for now, I'm just dollar cost averaging into ApeCoin. Every time we drop 50 cent, I dollar cost average in more. And I will be looking for us to one day revisit $27. Let's just call it $25. I would like to see us get back up to $25 eventually. So right now I'm just stacking up ApeCoin and stacking up Bitcoin and Ethereum. So that will conclude the pre-week analysis. I hope you guys gained some value from this. I hope it was informative. If it was informative and you gained some value from it, please hit the like and share button, and please, please, please subscribe. All right. So I appreciate you guys taking time to watch this lecture. And as I always tell my students, let your family and friends know you love them while they still here, please. And as always, peace and love, everybody. You know